Selecting a property management team to manage your investment is one of the most important decisions you will have to make. When you choose OBrien Real Estate to manage your investment, you can rest easy knowing that you're dealing with the true professionals. The best managing agents are identified by track records, vacancy rates, commitment to the best returns, professional portfolio managers, access to tenants, and a huge office network. We understand that selecting the right renter for your property is essential. Our team will ensure your property is marketed correctly and suitable applicants are reference checked for proof of employment and income and previous rental history or ownership. Promotion and marketing of your property is also key, and we will promote your property across the following channels: agent promotion, video and digital media including 3D walkthroughs with Matterport, property promotion on all the major websites, and print media. We have a large network of people ready to help you achieve the best rental price possible in the shortest amount of time with the very best of renters. At OBrien Real Estate, we believe that real estate is all about relationships and working closely with our rental providers to achieve the best possible result. Respecting your situation is always our priority.
Vacancy rates have dropped slightly since last quarter, with the state vacancy rate at 1.2% and the City of Casey at 0.67, showing how supply is struggling to keep up with demand. Across the OBrien Real Estate network, we have leased 730 properties this quarter alone. Servicing the City of Casey and beyond, our team are here to help with offices in Berwick, Cranbourne, Narre Warren, and Wantirna. With OBrien Real Estate, with one of us, you get all of us.
Hi and welcome to another great rental provider update. Today I have to my left Nicole Gardner, the director of our Wantirna office, and I have Evan Beisel, who's a partner at Mazars accounting firm. It's been another great quarter. For everyone out there should know, prices have again increased in not only their investment properties but principal place residency, and as you would have seen there, our vacancy rate are down and demand is up. So it's an extraordinary time in real estate. There's a lot of questions going around, but hopefully today we'll solve a few. But today is mainly focused on getting ready for tax time. I think it's really, really important, which we've got Evan here to do. And also Nicole about preventable maintenance, because a lot of people get it wrong. They generally wait to the last minute to get it. We thought we'd bring this to you straight away and help you get prepared for that. Another thing we've got to remember here at OBrien Real Estate, the purpose of today is to make sure that we facilitate your growth. It is a guiding thing that we do at OBrien Real Estate. It's what we get up every day to do. And also remember the guidelines and the roadmap for that is our values here. And we've obviously, as part of the broader OBrien family, we'd like to say that the number one thing and number one value is family. We also believe in mutuality, realising potential, embracing change, and health and energy. So if you need anything from our team, our magnificent team at OBrien Real Estate, you've got your portfolio managers there. They're all there to help to facilitate your growth at any time. But so the main thing we need to do, coming up to tax time, there's taking advantage of opportunities, but also as we move into the winter months, there's some significant things we need to do. And if you haven't seen the storms that are already raging up into the southeast of Queensland and northern New South Wales, I think it was a great time to get together and say, okay, what are some preventable maintenance issues that we can do? So Nicole, who's the director of Wantirna office in Knox, also been part of my network for 10 years, Nick. So we've had a long-standing relationship. You started as a property manager into a BDM and now your own director, which is just exciting with your husband, Grant. Yep. Share with us some of the things that are really important about preventable maintenance and making sure that properties are maintained and actually not repaired, because I think we get it wrong a little bit.
Yeah. Well, with the obviously increased rainfall, we are seeing a lot of call-outs for roof leaks. So cleaning your gutters is very important. I sometimes think landlords forget how important it is to make sure your gutters are serviced and maintained. Obviously, fencing is a big one as well. So making sure perhaps you get a fencing inspection done. We are seeing a lot of fences, obviously.
I want to go back to those gutters, Nicole. Whose responsibility is it to clean the gutters? Because a lot of rental providers think, the tenants, or as we call them, renters now, should do that. Mm-hmm. But whose actual responsibility is to make sure the gutters are cleaned?
It's the rental providers. It's not something the tenant would notice easily either. So they usually report it at last minute. So obviously the gutters have blocked, they've overflown, leaked inside the property, and then we've got a roof leak that we're dealing with. So getting those gutters clean will prevent that happening. So.
Yeah, because sometimes there is the difference between tenants' responsibility to maintain the property and owners' responsibility. And again, we've had a great summer and we're coming into autumn, so the leaves are starting to come down. So I think it's really important. You mentioned fences before as well.
A lot of them are blowing over. So, definitely something worth looking at. And obviously the side gates and things like that are something that needs attending to.
We've had some highly unusual storms, haven't we? I mean, even the other day, people might know, if you're aware of the Berwick office, we had over 4,000 litres of water that flooded through our Berwick office because of these storms. So that's why we thought, make sure that we've got all this done. Fences blowing over, responsibility of that, the gutters, anything else that you can sort of recommend that we need to get on top of?
Yep, servicing your heaters. So usually when the tenants go to turn on their heaters, the pilot light's out, we get a call out over the weekend. Obviously that's a late night call out fee from a plumber. So just making sure they're ready to go for the tenants to use them.
And for some people also, when you talk about that, great time to get a CO2 check if they haven't got it done already.
Yeah.
Because obviously we're coming to those winter months and those heaters are getting clicked on. And also a great advertisement is daylight savings is the smoke detectors. Let's check the smoke detectors. And these are preventable accidents that occur in real estate. And again, as we're coming out of summer into the autumn months, these are things that cause, significant drama, but also things that can be very, very easily prevented, wouldn't you say?
Exactly, yeah, 100%.
And on top of that, is there any other things that really stand out from that side? Like we were briefly talking about that in the opportunity of changeover from properties, it's a great time to update that.
Yep, so if your property is becoming vacant, it would be a good idea to obviously look at doing a fresh paint, if needed, new carpets, things like that, already for tax time.
And that's why we've got Evan here as well, which is great because it's a great time to revisit your property for that now. Nicole, you've been a great property manager for a long period of time. For any of our rental providers out there, what's the best way for them to get in contact with the portfolio manager? Is it?
Yeah, just contact the property manager. Our plumbers obviously are around. They do clean gutters. We can get quotes for you and things like that.
So, Nicole, you've been a great property manager and you manage some of my properties, and one of the key things you've always suggested to me is that don't wait until sometimes a tenant moves out. Maintaining the property, like getting some gardens refreshed, coming out of summer, they look a bit dry, the mulch in the gardens and getting some down. Do you recommend this to a lot of your landlords? I know you recommended it to me, and rental providers, I do apologise.
Yeah, absolutely. Firstly, the tenants love it, so it makes them happy, and it keeps your property looking really great. So if they were to vacate, it's ready to go, presentable and ready for photos. So,
Nicole, obviously it's 12 months on since the Residential Tenancy Act have changed, and there have been some significant changes. But let's touch base and just remind our rental providers what are the minimum standards that we can do and what they should be well aware of.
Yeah. Okay, so there's now 14 minimum standards. Happy to run through a brief description of each one. So obviously with external doors, we need to make sure that we've functioning dead latches that need to be fitted to each external door. Council bins, we need to provide council bins for each property, which is pretty normal. Toilets must be in good working order, so that one's pretty straightforward. Every bathroom has to have a wash basin, a shower or a bath, and must be connected to hot or cold water. Kitchens now must include a dedicated preparation area for cooking, a sink in good working order and a stovetop with a minimum 2 burners. Property must be structurally sound and free from mould and damp. Window coverings, obviously each window needs to have some sort of window covering, lounge room and living room. Lighting, obviously you have to have access to artificial light in the property, and heating now must have a fixed heater in the main living room.
So it doesn't sound like they're too unrealistic and unfair, does it?
No.
No.
It's pretty straightforward stuff.
For all our rental providers out there, you probably think that these RTA changes were going to make a significant difference, but really they haven't made that much of a difference. They've just created a great opportunity for us to look after your property and create a home for your renters. And when finding that this is creating a better atmosphere, better partnership by all parties. So, Nicole, thanks for that. If you're going to stick around, you might have some questions for Evan over here at any given point in time. To my right here, I've got Evan Beisel from Mazars accounting firm. Now, Mazars have looked after me both in business and personal for now in excess of 10 years, and I can't thank you enough. You've been there from the start of OBrien Real Estate and to where we are now, and as you said, from a personal perspective, to take your time out here today. We really appreciate it because we know that you're coming into a busy time, end of the business tax year, so certainly time is of an essence. I'm going to do that. Evan, you know, the last 12 months we've seen a significant price rise in the market, and a lot of our rental providers have actually captured that market and sold their properties. What are some of the common mistakes made when they're actually selling a rental property?
Yeah, great question, Dan. Look, one of the areas I see where a lot of owners don't anticipate the tax as they should is where there's been mixed use of the property. So maybe they lived in the property originally and then rented, or the other way around. They rented it for a while and then it's their home, and they've got in their mind, oh, the family home's exempt, I won't have to pay any capital gains tax when I sell. But in fact, if you've got a partial rental period in that ownership period, chances are you will have a capital gains tax liability as a result, and it's important to work with your accountant to work out what that is and understand that before you sell.
And we talk about in real estate because we're now coming up to the last quarter of the financial year, and a lot of our landlords, rental providers want to say, oh, come on, need to sell. What is the date? Is it contract date or is it settlement date? Because it's a big mistake that people make. They go in and say, I want to sell my property. I don't have to worry about settlement. I collect my money after the 1st of July, but my contract was prior to the 1st of July, which is this financial year.
Yep.
Let us know which is more important. Is it the contract date or the settlement date?
Yep, contract date every time. So that's the trigger for a tax perspective. That's the year the capital gain's going to fall. And that's a really important thing to understand when you might have different, if you're anticipating a different level of income in one year to the next, that timing your capital gain can be really important.
Now, you briefly touched on there before too about the principal place of residency, which is the place they lived in, is completely capital gain free, okay? But you said even partial living there. If you had a property for 3 years, 4 years, which is probably seen a good market growth, let's say 5 years, and can you briefly describe and what would they look like if they haven't lived in the property? It's been an investment property for the last 5 years, and we've had a compounding. Say it's gone up at least, say, 300,000 over that between purchase price and selling price. You know, some of that. What would they be looking roughly? Take away CPI, etc.
Yeah.
And how they could calculate that?
Yeah, certainly. So got 300,000 between sale and purchase price. That purchase price is going to be the starting point for their cost base.
Yep.
But to that, they're going to add stamp duty, any improvements. In this case, we're saying they rented it the whole time. Selling costs, that's probably going to be the end of the story for cost base. So let's say there's another round figure, 50 grand of costs.
Roughly with stamp duty, improvements, and that would be 50 grand.
Yep. So call it a $250,000 gross capital gain.
Yep.
Now, if they've held for more than 12 months, that then gets cut in half. 125,000 is the additional assessable income that the owner adds onto their tax return, and that's going to be taxed at their marginal rate. So that's going to depend on their circumstance, but if that was the highest marginal rate, 47%, you're looking at, what's that, 65, say?
Yeah, so it could nearly be a quarter, roughly, for most people.
Yeah.
That. The thing that I also looked at, improvements. Let's understand the difference between improvements and maintenance, because
really critical.
It is a critical thing. Like, I've just got a house that I've had for a period of time, and we've had to put in new kitchens, new bathrooms. Now, do I claim them as they happen, or do I claim them as an improvement? How does it work?
Yeah, it's a fine line. And so, for example, as a general rule, if you're replacing like for like, that's going to be a repair. Whereas if you're replacing something with something that adds
Value.
and adds value more than just keeping up with maintenance, but you've done an improvement. Now, where that line is sometimes a bit hard to determine, but as an example, replacing your carpets with new carpets, likely repair.
Yep.
Repainting, repair. Repairing your gutters, repair.
Yep.
New kitchen, usually improvement.
Yep.
Even if there was a kitchen there before, you put a kitchen in of equivalent standard, 20 years newer, usually that's an improvement.
And that improvement, can that be depreciated through the year?
So depending on the type, so any improvement is going to fall into two categories. Either it's its own depreciable asset,
Yep.
with it that you can depreciate over. Typically, it might be 10 years, 15 years, something like that. And an example of that is things like carpets, curtains, things that have some functional separation from the house itself. Everything else falls into the category of capital works, where you're only able to depreciate that over a 40-year period. So you're getting a 2.5% deduction per year.
And that's, as you say, 2.5% is over that 40-year period, which is interesting because, again, a lot of people miss that and think, oh, I've got this great kitchen, I've put this kitchen in, they've told me that I can claim it this year, financial year, but the real reality is if it is significant improvement that adds value on, then it actually isn't, is it? It's a capital improvement that can actually be claimed out. When we talk about properties, that we talk about getting a quantity surveyor to go in and do their depreciation schedule. Highly recommend that.
Absolutely. Yep.
And then apart from that, what are some of the things, because everyone's probably well aware with accountants and everything, you've got to keep good records. Is that right?
Absolutely. So when it comes to record keeping, we have a self-assessment tax system in Australia. What that means is that you have to be able to demonstrate what your tax position is at the end of the year. And so if you don't keep good records of your rental property expenses, you might as well not spend the money in the ATO's eyes. So you really want to be keeping those records and keep them as you go. Don't just throw them in a drawer and try and scramble them together at tax time. And this is where the more expenses that are running through your managing agent, where they're able to share reports with you, as I'm sure your agents are doing for your rental providers, that makes that process so much easier.
That's why when you're actually with our team, and Evan, I'm glad you touched on that, because at OBrien Real Estate, we are a full service operation in property management. What we'd like to do is make sure that we keep your records, we can actually maintain and service. So therefore, at the end of the financial year, you can go log into your account, and Harry's put a great video together how you can do this, and he'll actually share that with you. And then you can just transfer it, whether you're Xero or MYOB, you have the ability to download, send it across to the account, and they can move forward. So when choosing a property manager, make sure you have those discussions about extras that we do for your business, which is rates, water, anything that, any improvements, any maintenance that we do, we will look after that for you. So therefore, it's very simple at the end of the tax year, coming up to that June 30 date, that you can actually shift it across. Another couple of things that we've got to be concerned about, obviously, getting into that end of that financial year. What are the other things that you look for? Like I mentioned rates, and obviously the standout insurance. Is there anything else that we should be, guys that might just not understand or not expect to be there?
So one thing to be really aware of is any change in your borrowings during the year. So when you're looking at what interest you can claim against your rental property, you're looking at a purpose test. What's the borrowings you've used to buy the property, or to do improvements on the property, or even fund ongoing costs on the property? But that doesn't necessarily align with where your security is. So if you've drawn against the loan on your rental property to go and buy a new boat, that portion of the loan's not going to be deductible. But to the same extent, if you've drawn against your own home loan to make improvements on your rental property, you've now got a deductible portion of that loan against your home.
And it's interesting because, and also at the moment with some great interest rates out there, and we're not here to talk interest rates and financial management, we understand that. But a lot of people are going to get to the end of the year with all these interest rates that are so record low, and find out they're going to have a tax problem because they're positive geared, and yet some of them might have bought into a negative geared environment and said, oh, hang on a sec, where did I go wrong because I wasn't expecting that? Do you think that's going to happen over the next 12 months with the rents going up for a lot, interest rates coming down, and then they're going to get to the end of the year and go, well, what actually happened? I thought my property was negative geared, but they're not ready for it.
Yeah, certainly I think we're going to see a lot of that. I mean, it's all very well that they haven't paid as much interest during the year, but if they haven't been anticipating that tax liability, it's still going to be a sting for many owners.
Yeah. Now, given the fact that you look after a lot of clients that have investment properties, which is why you're here, Evan, do you recommend purchasing it as a tax benefit for rental properties? Is it something that you guys agree with and sort of work with at Mazars?
So there's certainly a benefit in our tax environment for buying particularly negatively geared rental properties, and the real kicker there is you're buying with the expectation of capital growth, but getting a full deduction against your income along the way. So 100% deduction, but then your capital growth is only taxed with the CGT discount, half of the capital growth is ultimately taxed. So you're getting that asymmetry of your deductions along the way with the tax on your capital gain at the end. And certainly that's a feature of our tax system that makes negatively geared rental property, assuming you get the fundamentals of the property correct, quite tax efficient and attractive from a tax perspective.
And a lot of people are thinking at the moment, and again, I'm not asking for financial advice, but they're thinking at the moment, okay, is it the right time to buy an investment property? And the answer to that is, prices are high, but interest rates are low, and there's a lot of people questioning themselves, is it the right time? Because we never really know whether it's the right time. But from an accountant perspective, would you suggest that maybe some of the clients should speak to their accountant to see what the position is first, or talk to a financial advisor on this? Because each individual is in a different and separate sort of silo, aren't they?
Absolutely. So, I mean, even negative gearing just from the tax side, so those deductions along the way, if you're a paying top marginal tax rate, that every dollar of deduction is worth 47 cents. If you're a lower income earner, maybe you're living off a pension or like a superannuation pension that's not taxable, you may actually be in a nil marginal tax rate where a negative gearing is not going to provide you any benefit.
Correct.
And so, talk to your accountant about your tax position, talk to your financial advisor about what strategy is right for you, definitely.
So, Evan, as we leave here today, is there anything that you could probably say to get for our rental providers what they should do, apart from we say keep good records, make sure you clear understand that their responsibility, not the accountant's responsibility to get it together. A shoebox worth of something is really no value at all unless it's put into line. What else should they do coming to this side just for their personal tax? Because, let's move across from the residential side. I'm sure there's opportunities that now, as we walk into March and then we go through to Easter, before we know it, June's coming up and we're all going to be rushed for that tax year. So what are some other advice you can give from an accountant's perspective, even outside the residential property, but more into their personal?
Yeah, so I think the main recommendation I make is to take the time to plan. So there's time now to think about what actions you might want to take before the end of the financial year, whether that's making deductible superannuation contributions or even paying some interest up front on your deductible debt, planning around whether if you're selling, be that property or shares or other assets that have a capital gain, do you want to trigger that capital gain this year, or do you want to push it out into next year? And even more than that, more than just looking to 30 June, but I would recommend that clients take the time to think ahead. If they've got a property they want to sell in the next 2 or 3 years, think about when is it going to be tax efficient to do that, and plan their affairs around that.
Evan, I'm going to thank you for spending that time with us, because too many get it wrong. I know a lot of rental providers over the last 12 months, 2 years again, have captured this great marketplace but haven't planned. And I think any good accountant will say, always plan for the exit, because you never know when it's going to happen. You've got to be game ready, I call it, with obviously Chris, who works at one of your partners at your organisation. Regardless of timing, regardless of opportunity, we've got to be game ready. So I think for everyone out there, for all your rental providers, a great time to have your conversation with your accountant. As I said, Evan and Chris from Mazars have been my personal and professional business accountants for a long period of time, and I highly recommend them. But thank you for your time today coming in. It's just a brief intro of what we can and can't do moving forward for all our rental providers out there, and I hope you got some benefit. But the main thing is reach out, don't make these decisions, and don't take them lightly. It's very, very important. So thanks, Evan.
Yeah, thanks, Dean.
So, as we've just learned from our rental providers, for you guys there, the tax is really important. I've brought in Harry Turner, who's the team leader down at the Cranbourne, and Isabel Chan, who's team leader at the Berwick office, to just explain what's going on in their businesses at this point in time, but more importantly, some great opportunities that they can take advantage of with tech. So, Harry, do you want to take over and just explain what you can do with the beautiful tech of Property Me, which is the landlord portal?
Yeah, so Property Me has a fantastic facility where you as our rental providers can actually log into the back end and see what's going on with your property. You can see all the finances, maintenance and all that sort of stuff, which I've got a brief video to show shortly, but it's a really good tool to get yourself set up for that tax time.
And it's a simple tool where we spoke briefly before about how you can just download a link and send it straight off to their accountant without all the paperwork, but really important. And I think as the team leader, I know that you push very heavily for your team to get behind their rental providers to make sure if they've got anything, they can just bring it into us. We can scan it, put it into that for them if there's anything else, or more importantly, just get us to look after their water, their rates, etc. Is that correct?
That's right. So we can pay anything that's to do with your investment property, the land tax, the water rates, the council rates, maintenance, anything at all. And every bill we pay will be not only on the monthly statement for each month that we pay it, but it'll be on the end of financial year statement too. And if you're not tech savvy as a rental provider, provide those login details to your accountant and they can log in and grab everything for you and make it a real smooth process.
And we could say if they do have what we call those receipts, etc., we could probably get them to come in, we can scan them in for them and just help them out. Is that correct?
Yeah, anything additional that we're not paying through the rental and we want adding into the system, we can just scan it into the system and then at tax time send everything back to you.
Because it's really important to understand that when you're looking for a property manager and in this industry, it's not just about collecting rent, it's actually maintaining the property, what Nicole showed us before, but also about making sure that you've got stress-free investment properties, because they're a great opportunity to create net wealth, but we want that to be a stress-free scenario for them. Harry, we're going to show them the video?
Yeah, good little video, really instructive. Hope it helps. Welcome to your Property Me Owners Portal. In this video, we will go over how to create an account and an overview of what information you can access. After requesting access through your property manager, they will send you an email like this. Clicking on the link will automatically take you to a web page with the instructions to link your account. Please click the Sign Up button to link your account with the email address we have on file. Please be aware that should you ever change your email address with us, you will need to go through this process again. Now that we have access to the account, let's go through some of the information we can find on the portal. First, at the top of the page, we have the address that OBrien Real Estate manage on your behalf. Below that, the type of property and the configuration of the home. Below this, we have some tenancy details, the names of the tenants, how much they pay per month, and the date to which they are paid up to. Below this, we have the agreement start and end date, and the date which the renters moved into the property. The financial section is broken down into some easy to read steps. The money in section is all funds that have come into the portfolio. Majority of the time, this is just the rental income that the renter has deposited into our account. We could also find funds that you have paid to us directly or a supplier has refunded. The money out section reflects any funds that have been deducted from your income. Bills outstanding shows invoices from trades that have been entered to come from the rent. You can also find management fees, letting fees and advertising fees here. The net balance is the amount that will be paid to you once the bills outstanding have been deducted from the rental. Any bills that have been deducted and paid during the month will be shown on your next monthly statement. The next section in the portal is relating to the jobs section. This will show you a list of all the maintenance tasks that have been lodged against the property during your time with OBrien Real Estate. Opening up one of these job tasks, you can see the description of the job, photos, if there have been any provided by the renter or by the trade when they have attended to quote for the works, the date that the job was reported on, and the due date when the job next needs actioning. Below this we can see who the job has been assigned to, which tradesperson, and who the job was reported by, be it the tenant or by the agent. Below this we can see any quotes provided, and below that again any bills that we've paid against that job. Below the Jobs tab we have the Inspections tab. This will show any entry, exit or routine inspections we've done on your investment throughout your time with OBrien Real Estate. Clicking into one of these reports, you'll be able to see more detail of that inspection, any photos we've taken, and any notes we have made. And finally, we have the Documents section. From here we can find the statements that we would send to you every time we disperse rent out to you, and any invoices that we have paid on your behalf, be that maintenance, rates notices, insurance premiums, and so forth will be found here. You can also find your end of financial year statement here when it comes time to meet with your accountant. And that's it. It's a fair bit of information to take in, I know, but if you do have any questions or would like access to your own portal, please don't hesitate to get in touch with your property manager. So as you can see, a great little tool there to be able to find out all the information on your rental property. Now there's also a tenant side to this where the renters can log in and look at the inspection reports as well. They can lodge maintenance, find their rental receipts, their leases and all that sort of thing. So both parties have equal opportunity to access all the information about the property.
Thanks, Harry. Well done. And it's really important that actually they get in there now and have access to it so they can actually find their way around to it.
Yep.
I'm going to hand it over now to Isabel. Isabel, we had 2 amazing days of training last week. Was it last week or the week before?
Week before.
Wow, time's gone so quick. But we sent down at Cape Shank. We had over 100 people in the room that were all property managers around the organisation at OBrien Real Estate. We had administrators, marketing people. We had some amazing speakers like Jackie Cooper, the Olympian. We had Michael Crossland. We had Jet Saviour. We had Jackie Scammell. We had our very own Property Management Council at OBrien Real Estate. Do you want to give us a debrief, what you got out of it, but more importantly, the importance of training at OBrien Real Estate and why we do it?
Yes, I could go on for probably hours with what I got out of it myself, but mainly just really focusing on a great customer experience for all of our clients. I also took in a lot personally myself. We listened to obviously a lot of self-development speakers, so it wasn't just training on the day-to-day mechanics of our job. A lot of the team mostly got things out of it themselves on what they can do to be better, not just at their job, but in day-to-day life as well. We had as you said, our PM council as well speak, and we discussed market trends in all of the areas, not just our core area that we work in. We discovered that it's basically the same across the whole of wider Melbourne at the moment. So the same trends we're seeing, a lot of higher rents, a lot of low vacancy rates, and lots of owners selling as well.
It has been a trend, and the Mornington Peninsula in particular was noticed that there is a queue now to get into the Mornington Peninsula because, again, a lot of people are selling, investors are selling their holiday houses or moving back into them, weren't they? And just having the luxury of 2 houses and travelling from Melbourne and back and enjoying that summer lifestyle. You spoke about, so we've got a common trends, but there's still a lot of new investment properties, people out there buying at the same time. Tamara gave us a great insight on the average age of what people are buying, and there was a significant part, but it didn't really, age was no barrier in buying investment properties, was it?
No, it wasn't really a barrier at all. We are also finding a lot of our applications that we're receiving for rental properties are for first-time renters as well. I don't know if that's got anything to do with being locked down and staying at home and needing a bit of a change.
Possibly could be time to get out of the house.
So it was pretty much the same trends that we're seeing across all of our offices.
And a lot of the new owners that are buying these investment properties are local.
Yeah.
Which was one of the interesting ones, because I thought a lot of people look towards probably picking an area where they're going to get capital growth, where they get a great return, but we've actually found a lot of people are now comfortable just renting, buying their investment property local, which we're experiencing in Berwick and the City of Casey.
We are finding a lot of our rental providers selling their principal place of residency and moving into their investment property, but also purchasing a property in that same area.
Yeah, it's a general location. It is actually capturing the high market that we've got, and quite, again, the purpose of today was absolutely making sure that we can maintain properties but getting prepared for tax time as we move forward, which is great. You talked about a girl, we had Jackie Scammell, and you said your takeaway customer service, be customer experience, and how definitely at the moment we're finding that there's expectations are higher, tolerance are a little bit lower. That's our job to fix. What are you doing with your team at the moment?
We've got a bit of a drive happening at the moment that we're really going to focus on using the phone first. So we're trying to take away sending back and forth emails, because the communication can sort of be lost in that a little bit. So you can expect more phone calls from us, which is a good thing, and we all love to have a chat as well. So
guys, thanks for, as we come to the end of our rental provider update, we really again like to thank all of you guys for entrusting us to look after your property. But please don't be afraid to pick up that phone, because we've got a phone first attitude at the moment, and make sure that we've got everything right for you moving into the end of the financial year, because as we step out of summer into autumn, it's going to come up very quickly on us. To Harry, again, leading your team again for the last quarter, thank you so much. To Izzy, also leading your team, and to Joe and to Nicole that we shared today, thank you guys. If there's anything we can ever do for you here at OBrien, we are to facilitate your growth. That is our purpose, and we want to continue to do that. Thanks so much, and see you next time.